Well, what does it mean, this trade relief, as it comes about for the markets, commodities and equities both? Let's ask Geoff Lewis, Senior Asia Strategist, Capital Markets and Strategy Group at Manulife Asset Management. He joins us on the phone line from Hong Kong. Geoff, good morning. Many thanks for taking the time out and speaking to us at Bloomberg Quint. What do you think this means? The markets are not reacting in a big way, but maybe the markets are already taken in the possibilities of this trade war getting extended. Now are the markets believing that this truce and how it works out might also be a long-drawn process, therefore no need to react so strongly right now?
Well, I think markets have not discounted the worst case for a trade war. If you look at their relative resilience this year, they're not down that much. And, as you say, almost a complete lack of response. So I think the markets have not discounted the negatives of trade war. They were always assuming that rationality would prevail, that there would be some kind of agreement, that there would be a sitting down and negotiation of these trade issues between the U.S. and China. So I don't think we're going to see any big market moves on the back of this initially. There was a tick up in the S&P 500 futures. There was a slight increase in yields in the Treasury market. But by and large, no big impact. So what we have here is it's not really an agreement for a trade deal. It's an agreement to sit down and try and negotiate a trade deal. And that's obviously what we've been looking for. These issues are not going to be sorted out in a moment. And focusing more on some of the longer-term issues like intellectual property is quite... is appropriate, I think, rather than just focusing on can we get the U.S.-China bilateral deal down by $200 billion over the next couple of years. That's short term. That would just be a palliative. So the good news is I think that at the end of the day, U.S. and China trade relations could be on a firmer footing. I mean, we could have lanced the boil that's been a contention between them.
Geoff, the fear always was that if the elephants fight, the grass around might get trampled upon a bit. And now, there were two large geopolitical stroke international fears, right? One was a trade war, one was geopolitics. We don't know what will happen with geopolitics, anybody's guess. But with this announcement, do the worst of the fears of an imminent trade war and the impact that it could have on either sides out for now?
Oh, yes, I think so. The fact that there's simply too much for both sides to lose. The two economies are simply too closely interconnected that whatever their differences on politics, whatever their differences in terms of strategic competition, the economic relationship is central, and you can't unpick that. You can't reverse it without causing tremendous damage. And so I think... it's going to take a long time for these negotiations. They're going to probably drop out of sight for a while. And at the end of the day, there will be some compromise agreement. So I think the big risk to the economy was not the direct effects of tariffs on this amount of bilateral trade, which the economic models told us was not going to have a big impact. It was more the general impact on business uncertainty and the likely impact that would have had on investment. So I think it's good news all around. And the global economic background is strong, let's not forget that. And now trade fears have at least been postponed, if not totally diffused.
I mean, until it happens, we will talk about it when it happens. My last question, Geoff, do commodities and particularly oil remain at the mercy of geopolitics as opposed to these trade wars? And therefore, would oil movement be largely determined by what's happening in the Middle East and Aramco and a few other factors as opposed to this?
Well, I think the recent moves up in the oil price have been driven by supply-side factors, by geopolitics. They've surprised people, I think, by how quickly oil has moved up. But don't forget the reduction in inventory imbalance was the most rapid on record, according to Cornerstone Economics last year. And the oil price is supported by the strong growth in the global economy. So I think we've pretty much got a floor under oil at $70 a barrel for the immediate future.
Okay, Geoff. We'll leave it at that. Many thanks for joining in today and giving us that perspective. So Geoff Lewis believes that any fears of a trade war have been postponed for the time being. Until they come, we believe that they're not going to come. Let's wait and watch what happens. Therefore, the markets, none of the equity markets or commodities for that matter, are reacting in any big fashion as of now to this announcement. Let's see if there's a bit of a delayed reaction that comes in during the course of the day. It's an important piece of news for sure.